Hello everyone, this is Teddy Kecksteff from Forex Trading Unlocked, and we are here today on October the 15th, 2020 for a Forex market trading analysis for Friday, October the 16th, 2020. So we have a couple of things that are happening around the globe. In fact, we're already on Friday as it is in the Forex markets. So we'll see how things ended today and where we're going. Real quick, just putting up our disclaimer to remind you that this webinar is for illustrative and educational purposes only. If you want to ask any questions on the chat room on Yahoo and also on Twitch, we have our chat rooms up so we can see any questions if you want to ask them while we're going through this video. So with that being said, we want to just give you one quick plug for a book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. Through it, you can utilize the best buy and sell signals used for over 400 years to give yourself a competitive edge against the markets. And we will be talking about some of these patterns today because they are in our video. So while you're at it, since you're watching this video, if you already haven't done it, please subscribe to our YouTube channel, and that way you can check out our playlists and see what kind of content we've had over the years, and also what we've been doing with some of our other companies that we deal with, like TFNN Corp, where we do our weekly Wednesday spot, the Nadex and the eoption.com, and some other venues. So with that being said, let's go to our www.forex-trading-unlocked.com website, and from the market analysis tab at the top, we already have the workstation page pulled up. As far as economic numbers tomorrow, we do have, let's see, retail sales for the United States, which are big bond numbers, so they'll affect the currencies a little bit, potentially, and we'll see how that shapes up tomorrow morning. And then we have, let's see, the U.S. dollar index chart. Now, as you can see today, the dollar index had a nice little bounce. The euro, the pound, and other currencies have started to retreat against the dollar once again. It was looking last week like the dollar was going to be back into a very bearish mode. We could be just in a big sideways, but if you really take a look at it, you have to remember that we've been making a series of higher move highs and higher move lows. So the big thing here for you to key off of on the overall dollar index picture here is the most recent low, and we'll see. Let's get this over here. Okay, so now there's a little more room. So any failure from here, this would be where I would say that the dollar index will be continuously under pressure. The bears definitely, will have a good chance at riding support. Now, the one thing is this could be basing. We could be set for a big sideways motion trade. Like we could be trading between 92 and 95 here in the dollar index for the next couple months, the next 6 months, the next year. Who knows? Probably not that likely, all considering, and not just taking 2020 into account, but just in general. But you never know. Things are shaping up, to be very bullish right now in the short run for the dollar. So dollar bulls, looks like you're doing okay. So now we're going to go look at the very first and biggest component of the dollar index, the euro-US dollar. So the euro-US dollar had a nice little high last week. And has been breaking ever since. Now, here's the thing you have to look at. We had made a higher move high off of this nice correction higher. Now, we had a head and shoulders pattern that had been triggered. Back in September, we had this nice little slide. We made lower move lows after lower move highs. Now, technically, even though we have been making higher move highs and higher move lows on an intraday basis, which has made it now over the past week and a half, this is most likely a correction. And I want you to look at this. If you take a look at the fib level here, we pretty much came right into just shy of the 0.618. And here we are at the 0.50. So right here, this was a good spot for a retracement to end for this basically a bullish move for the euro-US dollar. Now, if this is truly in a bearish market right now, where the head and shoulders was the top, and now this was just a corrective move higher, where are we going? Well, right now I think you have to key off of this most recent high and look at us targeting definitely this last recent low back here in September at $16.05. I think we're going to more likely get down into this $14 area. If you just look at from this major low back here, over the summer to this high on the beginning of September. We go to a 0.618. That puts us all the way down at $1.1489. So this would be a good longer-term target area for us to shoot for over the next, I would say about maybe a month and a half. You know, we do have an election coming by, and I think that definitely the week before the election, we're going to see a lot of just sideways, going nowhere movement for the currencies until the election gets finalized. Well, okay, finalizing the election, yeah, right. That's a whole other topic, I guess. But we'll see. This is right, like I said, the area where I think you're most likely to see the market gravitate towards somewhere around this little area and over this time frame. Right in here, this is most where I see it's going down as far as a bearish scenario, and especially if we take out this last low over here. Now, key off of this recent high. Now, if we take out this high, well, then it looks like the sell signal from the head and shoulders is not that strong. And that's the other thing too, is that even if we just fell short of the 50% mark. So even if this head and shoulders was going to give us a 50% mark of the move up, that's not that big of a move. So we basically almost hit that. Typically for something like this, you would get a bigger move that would probably get us definitely in, actually I think below 1489 area and more towards this 14 half down to 14 even area. So we'll see what happens, that's for sure. And it will definitely, but I think going into Friday's trading, we can see that it's slightly lower today after being, slightly lower for Friday's trading already. Being Thursday night, it's already on Friday for the currency markets. So yesterday's follow through or slide was then continued again this afternoon as the markets closed and rolled into Friday evening and Friday morning's trade for the globe. So now we'll see what happens with the other currencies as we get through this webinar. Let's see, do we have any questions? We don't have any questions on the Euro US dollar. Now we do have a question about the gold versus dollar. If you look at this market right here, has been wedging over the past month. October hasn't been very much of a, much to say about it. It's been trading in a pretty tight range between $1,900 an ounce and 35, something like that. Yeah, or was it 1880 to 1930. So basically in a $50 range, which for gold right now, considering all the hype and everything about it, that's pretty tight. However, it has been trending higher since the end of September. We've been making, but this also I think is kind of looking a lot like the Euro US dollar, and I think that that's what we're starting to see, is that as the dollar bears that had been so tough against the dollar for so long, especially going into this year during the Corona thing, after the Corona wave hit, and then we started heading into the summer. I think you're starting to see that subside, and I think you're going to have a rebalancing of the disconnect that had happened between the gold market, the currency markets, the interest rate markets, et cetera, et cetera. And I think that gold definitely has a reason to be flight to quality instrument, if you will. It's definitely a hedge versus inflation, but as far as that's concerned, it's way, way, way overpriced when it comes to that. So we'll see. And then I think that the demand also for it, just to begin with, there's an artificial price high floor rising, but not to the extreme that where it's at. Like I could see gold reasonably getting down to 1,800, maybe even 1,750 an ounce sometime before the end of the year. We'll see. Now it could also easily be at new highs and be up at over 2,080, 2,100. $2,500 an ounce for all I know. But right now it's wedging, and I think until the election, it's going to really start to stabilize, because I think that it has to show what it is. Gold is a means of stability. So now back to the currency. So we looked at the Euro US dollar. Now let's go to the British pound US dollar. Now this one here had given us a nice little sell signal a couple days ago with this bearish engulfing line right here. What happened to my arrow? I guess I didn't hit that properly. There we go. Oops. Okay. So this red down day right here, this is a bearish engulfing line. If you read the book High Probable Japanese Candlestick Patterns, available on Amazon and Kindle and paperback versions, you can learn how to trade this signal. It's usually one of the best Japanese candlestick patterns I like to use, especially with major markets after it's been trending into this. As you can see, this started to this bottom back at the last week of September and has traded all the way up until last week, up into here, or actually on Monday rather, and then it topped out, and now it has been trading lower and has had follow through with today's trading already. So that being said, I think that you're going to have more opportunity to capitalize the downside than the upside. Use this high as your barometer. Anything below here, I think you're going to be in a sell rally forecast, at least on the hourly basis and daily basis. Any breach of this high, all bets are off, and that's going to be a neutral to higher trade for the British pound US dollar. And that's, if you start to see all the currencies rallying against the dollar, then you might see this. But here's the thing: is that people aren't really talking about and watching right now is Brexit. Brexit's going on for the British pound, U.S. dollar, and also for the euro and things like that. So I heard it on the news. They were talking about how, regardless of how the election works out, that Trump's going to have a trade war with Europe. No, actually, because of Brexit, we have to renegotiate trade deals with the EU because the UK is no longer part of it, and vice versa. They have separate agreements with the UK and redoing, coming to terms with our EU deals that we have already set. How big of a deal is it for the EU? I don't know. I mean, I think everything that has to deal with us politically right now is a big deal, and is going to be a circus. But these things are all things that benefit America. I mean, right now, no matter what, you don't have to like the things that have happened and what have you. Everyone has their political take, but at least for economic numbers and manufacturing and things like that, it has been working. So we'll see what happens, but I think that no matter what, that is on the table, and you have to think that for the pound, and even for the euro, it has them in at least a holding pattern. So if you're very bullish, I don't see you having any real opportunities to the upside. And I think in the short run, you have an opportunity for more breaking action. So as far as where we're going to go as a target, let's take a look at this last low back this summer up to this high back here at the end of August. And if you look at the correction, we've already hit through the 0.618. So if this was just a bounce in a bullish market, then this is pretty much going to be it. So we're going to use this low as definitely our big major selling level. Any failure from here has this market in a very bearish pattern. Okay, so and as far as a target, I think that somewhere close to here, at least for the next day or two, is probably a good idea. If we take this low and we go to this high, you can see that for the points for the 50%, we've already hit it. So we're already, let's put this right on today. So we're right there, and here is the 0.618. So this is our little trading band right here. If it's bullish, somewhere around here, we'll see a bottom. Not to mention, we won't take out this last swing low, which is just above that little fib level. So when you put all that together, we're pretty much in the line in the sand for the British pound US dollar. And the failure from that definitely adds momentum to dollar bulls, and it will most likely it will have some bearing on the euro US dollar as well. So a lower pound dollar is at least over the next evening and going into Friday afternoon and the end of the week as we close out this trading week. I think that if we see especially all the other currencies under pressure versus the dollar, it's very likely that the pound will be. And even unless there's a major rally in other currencies versus the dollar, I don't think you're going to see very much of positive action for the pound, at least as we close out this week. Now let's look at the US dollar, Swiss. And we had a nice high probable Japanese candlestick pattern here the other day called a bullish engulfing line. This is what gives me some credence to this whole dollar turning thing. We have buy signals going off here in the US dollar Swiss. We have sell signals going off in the pound US dollar and also in the euro US dollar. These are all reasons and rationale that tells me that, excuse me, for at least the next leg, I would say probably trading now into next Wednesday, we'll see at least a little bit more of upward pressure for a dollar index and for dollar bulls, meaning negative pressure for the major currencies versus the dollar. Now, this is the European ones. As we get to some of these other ones, we're going to see that this is not the case. The U.S. dollar yen, it's in a bear market, so I'd be really cautious trying to be a dollar bull versus the Japanese yen. So we now change the U.S. dollar, the European U.S. dollar quadrant. Now let's go to the U.S. dollar Canada. So the U.S. dollar Canada had a nice little bottom a couple sessions back, and it's made a nice little move higher. This is a market too I would key off of. If the pound and the euro and the Swiss start to fall apart versus the dollar, it's likely that the Canada will also follow through, having weakness versus the dollar, but not as extreme as we're seeing in those other currencies. So I would be very cautious being a major bull in this market. Right now I am in a buy dip bullish posture for this market, but just to be on the safe side, keep your expectations very rational when it comes to U.S. dollar Canada. Now let's look at the U.S. dollar JPY, which is, just like I said, this one's going lower. So where the dollar is being strong versus other majors, look at even as we speak, this is on its lows. Is it having a major sell-off today? Absolutely not. But as the dollar index turns positive today and holds upside pressure and bullish pressure, I think that this is where you're going to see the one weakness part. Like this is the yen is not trading in tandem with the other major global currencies, and it isn't a bear market. So for your U.S. dollar yen fans out there, this isn't a sell rally forecast where we're looking to go against the U.S. dollar, but not so again in the Australian dollar US dollar, which we have made a nice corrective move that ended, and this week we've been trading lower for the most part every day. We now have some follow through. Once again, I think we are more likely to take out the low that was established for Thursday, which was today or earlier today, than we do taking off that high that was from last week. So key off this high for direction. Anything below here, I think you have a chance to be a good bear and have some nice selling opportunities. Only a breach of this to the upside confirms any neutral to higher trend change. Excuse me, my tongue is tied. And like I said, right now we had made a higher move high and a lower move low, so that confirms either a neutral to lower trading bias right now, and that would set this up to have been only a corrective move higher, which meant we made a lower move low, established a lower move high on the longer term. So here was our top, here was our wave 1 down, then we have our wave 2 over here, and then we have, in fact, just to make this a little bit more clear, so here's our head up here at the end on September 1st, beginning of September. We broke down for a week and a half, bottomed here, and then we had a nice little bounce. Then all of a sudden the market fell apart in a big way, may establish this low, and then since then we had a nice rally back up to this area here. We fell apart again and had a nice big sell-off, taking out this prior low over here, and that was our big sell signal. So definitely below there as well. I think we're going to keep this market in a bearish posture, looking to make a breakdown probably to the 69 area. I wouldn't get too crazy as far as how far of a break we're going to get out of it, but let's see. We'll put this here, and okay, so if we take out this low, then we'd be targeting this area here. Yeah, so like I said, 69, so 69.14, just above 69 even for the Australian dollar versus the U.S. dollar. New Zealand dollar, U.S. dollar, also we are looking to be a bear. And as you can see, let's see. Today, this one is having a little follow through again, not as much as the other currencies, but it is hanging at near its lows, and this one as well, I think, did the same thing, where it had made a corrective move that had ended, and this one ended only a couple days ago versus the other ones that ended more than that. So this one is acting. This is kind of like a cross between the yen and the other ones. It's like when it's doesn't always go in tandem with the other ones. It's trying to go in tandem with the Australian dollar, but there's totally different issues there than there is in New Zealand. And I think that because of that, there's a little disconnect between that trading zone. So meaning that the dollar is bullish right now. Let's say that it continues. Okay, it's obviously been bullish for the past couple of days. It doesn't take. I mean, it has been. That's a fact. We're not talking about the future, so that's a fact. Now the question is while that's been going on, it hasn't been a bull versus the yen. That's for the part of the Asiatic trade zone where that's not a disconnect. That's been going on for a while. And as far as like now with the New Zealand dollar, U.S. dollar going lower, just like the Australian dollar, they're in a disconnect with the U.S. dollar, yen going the other way. And I think that the New Zealand dollar is not going to be as extreme as the Australian dollar. So meaning that even if the New Zealand dollar continues to go lower, I don't see it really moving like the Australian dollar. So I think that you will still see this to be in a bearish forecast as we head in to the end of October and towards the election in the United States. But as far as a big sell-off extreme, I don't really got one for you, folks. So we have to confirm a breakout to the downside right here. A failure of this last low here. This confirms our negative bias, and that gives us an idea of where we're going to get down to, which I think most likely would be somewhere around here. So, I mean, we already have this level here, which is just below this last swing low. So yeah, it's a good area. If we take that out, then targeting 64.70 is definitely on the menu. As far as how much lower it would go than that, I would use caution with this one. Like I said, I don't think that if we have a sell-off, meaning big dollar rally, that the New Zealand dollar is going to get hit as hard as, say, the Australian dollar may. The Australian dollar can really easily get hit, which brings us back to the XAU. If this starts to really collapse, I think this is where you're going to see the Australian dollar fall apart. So as you can see, like gold is wedging. New Zealand dollar is not so indicative on gold as Australia is, but it still is a little bit. You can see how when this wedging started, remember this bottomed here at the end of September. Had a nice little rally up until last week. Now it's going sideways. Well, this market topped at the end of September, and now it's going sideways. So it's a very similar pattern to that, and that's why I referred to the gold in the very beginning of this webinar. And I believe that if gold takes a hit, it's very likely that especially the Australian dollar is going to take a hit. The U.S. dollar yen probably will go the other way, meaning that the U.S. dollar yen will go lower, while the Australian dollar U.S. dollar also goes lower. But one's going against the dollar, one's going with the dollar, one's hurting the dollar, one's being hurt by the dollar. New Zealand dollar, on the other hand, I think in this situation, there's with this disconnect and divergence, that the New Zealand dollar will probably, at the same token, be weaker and be a bear, but just not as extreme as the Australian dollar, U.S. dollar. So now let's go back to Euro, U.S. dollar real quick. See where we're at. Hopefully you've subscribed to our YouTube channel. If you haven't, remember that it looks like this. You can get to our archives and other see what other kind of lessons we had for options and for binary options and things like that. So Euro, U.S. dollar, still a little bit lower on the evening. And like I said, I think we're going to continue to hit new move lows, targeting this 114.89. Now this is going to be probably by the election. So if you look at this as a time horizon, we'll put this, let's see, November 4th, because this is when the elections are over. So sometime between now and then, I see us snaking down and reaching that area. So it's about a $2.50 move in the Euro US dollar that we can still see fall apart. and trend lower. But this is going to take, I think, it's going to take a little while. I don't think it's going to be a big extreme sell-off. I think you're going to see a lot of sideways days, kind of like this, where it's just going to slowly just decay as we head into this time horizon. So with that, I want to say thank you very much for your time. Please subscribe to our YouTube channel. Once again, YouTube, you can always just search us on the search bar, Forex Trading Unlocked, and you will find our YouTube channel. Subscribe and check us out. And also remember to read the book High Probable Japanese Candlestick Patterns, so you can learn how to trade those trading signals and integrate those into your trading arsenal and war chest. Since we don't have any more questions, I answered the ones on gold and the other ones and kind of gave a good breakdown on that. I think we are done with our time for today. We will have this on a loop playing over and over through the rest of the trading day into tomorrow afternoon. Thank you very much, and always check us out every day at forex-trading-unlocked.